Welcome back to Chai with Siddiq, your weekly market wrap for NRIs investing from the Gulf. 13%. That's how much oil has crashed in 2 weeks. The Gulf is watching, oil in free fall. Tech giveth and tech taketh away. That's the Nasdaq in a sentence. And the Nasdaq surge we talked about last week completely wiped out and then some. The world sold off. India didn't get the memo. And maybe that's the point. This was a rough week for global markets, but India barely flinched. We are going to talk about why that matters. Grab your chai. Let's go. Red week for Wall Street, a second consecutive big drop for oil, a more hawkish tone from the US Federal Reserve, continued pressure on crude oil. Let's walk through the numbers. S&P 500 closed at 7354, down 1.95% for the week. After last week's solid gain, the market gave it all back and more. Broad-based selling across sectors with tech leading the decline. Nasdaq 100, this is the one to focus on. 29,118, down 4.62% in a single week. Remember, last week we were talking about a 3.49% surge. That's gone. We are now net negative over a 2 week window. AI enthusiasm gave away to reality this week, whether it was valuation concerns, regulatory noise, or just profit taking after a big run. The volatility in tech right now is real. Nifty 50, 24,056, down just 0.31% for the week, essentially flat. While US markets were down nearly 5%, India barely moved. 2 weeks in a row of this. Will come back to what that tell us. Sensex 76,803, up 0.24%, a slight gain while the world sold off. The large cap Indian names are holding up. Domestic demand, RBI policy, and falling oil prices are all working in India's favor right now. USD INR at 94.36. The rupee strengthened again this week, up 0.34% against the dollar. 2 consecutive weeks of marginal rupee strength. If you are remitting money home, conditions have been quietly improving, not dramatically, but in the right direction. Brent crude, and now the number that defines this fortnight. Brent crude 72.85 a barrel, down 5.35% this week. That is a 13% crash in crude oil in just 2 weeks. This is no longer a 1 week blip. This is a sustained move, and it has enormous implications for the Gulf, for India, and for inflation globally. Three forces are driving what you just saw in those charts. The Fed holds firm and market didn't like it. The US Federal Reserve signaled this week that it is in a no rush to cut interest rate. With inflation still sticky in services and the labor market holding strong, Fed officials pushed back on the idea of near-term cuts. That spooked market, especially tech where high valuations depend on expectations of cheaper money ahead. That is the Nasdaq story this week. OPEC Plus floods the market. We talked about OPEC Plus last week when crude first fell sharply. This week the data confirmed it. Saudi Arabia and key Gulf producers have committed to significant production increase through the remainder of the year. The reasons are pretty internal to the cartel and partly a signal to the market. Either way, supply is rising faster than demand. With China's economic recovery continuing to disappoint, the demand side isn't absorbing it. Oil is in a genuine downtrend right now. Geopolitical de-escalation in the Middle East. There were also signals this week of reduced tensions in parts of the Middle East. Ceasefire negotiation making quite progress. Historically, geopolitical risk has been a floor under oil prices. As that risk premium fades, crude falls further. Combined with the OPEC plus supply push, you have a perfect storm for lower oil. Now, let me put on the Gulf NRI lens because this week's news hit us differently than it hits a retail investor sitting in Mumbai or New York. Oil at $72 a barrel is a two-edged story if you live in the GCC. The UAE has diversified its economy significantly, tourism, logistics, finance. So the direct hit is less than it was decades ago, but sustained lower oil prices do eventually tighten government budgets, slow infrastructure spending, and affect sentiment in the region. This is something to watch, not panic about, but to have on your radar. For your India portfolio, though, this is good news. Cheaper oil equals to lower fuel costs, equals to lower inflation, more room for the RBI to cut rates. Indian equities should benefit. The fact that Nifty has been flat for 2 weeks while the macro tailwind is building could simply mean the market hasn't priced it in yet. It often takes time. And on the Nasdaq sell off, if you hold any global equity ETFs, you fell this week. These funds have significant US tech exposure. A 4.6% Nasdaq week is painful in the short term, but for long term investors, this is exactly the kind of volatility you are compensated for by staying invested. Don't let one bad week change a 5-year plan. To sum up, a tough week for global markets. Tech hit hardest, oil continued its slide, and India quietly stood apart from the selling. The geopolitical backdrop is shifting and the macro signals are mixed. The Fed is cautious. OPEC has acted, and India may be quietly setting up for something interesting in the second half of the year. We'll keep tracking it week by week. That's it for Chai with Siddiq. If you found this useful, like, share, and subscribe, and bring a friend along. More NRIs investing with intention, the better. See you next week.